Bam lady. So the Cat Bam founder was like a talk show.
Holly. Yeah.
Yeah. Okay, so we're live. Hi Felicia, welcome to Venture with Grace.
Hi, Grace. Thanks for having me. Happy Friday to everybody, I guess, who's listening in, or happy weekend if
Yes.
they're checking out over the weekend.
Yeah, happy 4th of July for every person who's tuning in from the US, which is probably
That's
every
true.
person.
Yes. That's a
Um,
big one too.
That's a big one too. So, okay, so to start the show, I would love for the audience to get to know you a little bit more. So, I saw that within your career, you have worked on various different roles in marketing or at different size of companies, from different startups to, in the end, there was like a Singapore development. Uh, oh my God, no,
Economic
what's the word?
Development Board.
Exactly,
A mouthful.
economic development board. Yeah, I actually met someone who works there in SF before. Yeah,
Oh, right. Yes. They do
yeah,
have like global offices. That's true.
for sure. Why don't we start with like what were some core lessons that you've learned early on in your career that kind of shape you into who you are later on?
I mean, so many. I guess as a recap first, I think my path into VC was very nonlinear. It wasn't something that I planned on. I kind of like fell into it accidentally. That's my cat. I'm sorry.
So
So
active.
the witching hour.
I
It's the
feel
witching
you.
hour. He's gonna make himself known. But I think I spent the first 8 years of my career working in growth basically. And you're right, it was smaller startups, it was larger companies. I think I always just loved working with founders really closely. My first job was actually out of college, was basically working out of my first boss's living room.
Mhm,
She decided to launch her own brand of leather bags and accessories. And
mhm,
I, at that time in college, thought, oh my God, I would love to work in fashion. So that seemed
mhm,
like a great idea to do. And no regrets. It was super fun. We got to launch it, worked, days out of my school week to ship it. When I graduated, it made the most sense to just see that all the way through to launch. And, we were pretty successful with getting it stocked at departmental stores in the US and in Paris, and got a little celebrity following for it. So that was super fun.
mhm,
And then from there I moved on to the Economic Development Board. I thought, what greater challenge can there be than marketing a country, right?
mhm,
The whole role of the Singapore Economic Development Board, in case some folks aren't familiar with it, is at that time was to basically get global conglomerates, MNCs, to set up shop in Singapore and then kind of build their presence there for Southeast Asia or for APAC. And so, it
mhm.
kind of involved kind of positioning Singapore as a great place to set up businesses. And a lot of that is true. And so I thought that seemed like a great challenge, joined that. I think quickly realized that that wasn't really my cup of tea, to be
Mhm.
honest. I think there's a huge culture shock of like going from a startup scenario where you're very conscious about ROI to perhaps somewhere where, like, how do you measure success? It's not revenue. It's not, return
Mhm.
on ad spend. It's not CPIs or CAC or anything like that. It's very difficult to measure and it's very different. And so quickly realized that that wasn't really my cup of tea. I really liked being in leaner organizations that, I felt like you're a real key contributor. And, that was something that I kept at the back of my mind. I ended up working at a few other companies after that. But I always knew that I always wanted to go back to working in startups. So ended up working, my last full-time growth role was with a health tech startup. That was really interesting here, very different to, I've done e-commerce, I've done health tech startup. And that was really different. That was the last full-time growth role I really had. Decided to leave. I'm so sorry. Did you hear that?
No, no, yeah, I hear that, but it's okay. As long as there's no earthquake, I feel like we're fine.
My cat just threw a box over the shelf.
Oh my
So
God.
that's great. He's super cooperative. But yeah, no, I was at a health tech startup, decided to leave. Basically, I was burnt out. And I think that happens a lot with health tech
Mhm,
specifically.
mhm,
And had been, spending 7, 8 years of my career at that point working in growth. And I wanted to do something different. I just didn't know what. So I'll be honest with you, I spent like 3 weeks on the couch. I thought I would meditate my way to like Zen and figuring out what I wanted to do. And I had this list of like things I want to do in the future and things I don't want to do again. And, all of the things I didn't want to do again, all the things I wanted to do in the future was informed by every one of my experience before that. But I wasn't getting anywhere closer to something specific. And so I figured, I'm not going to do this meditation thing. I don't think it's for me. I'm going to take a different approach. I'm going to try new things and figure out by doing. And so I figured, I've I've left my job. I'm not doing anything at the moment. My parents are super worried. They're Asian parents. They're like, why did you leave without a plan? And I was like, it's fine. I'll give myself the grace period of a year. And I made the rule really simple. I was not going to overthink it. The question I would ask myself is just, am I going to learn something new from this? Yes or no? And if it's yes, just say yes and try it. And the worst that can happen is that I discover I don't like it or it's not for me. And then I'm back at square one. So it's like no loss, right? So that was really a really beautiful experience. I would have to say it's probably the best thing I've done in my life. And I ended up consulting for a games company. That was super fun. I ended up consulting for a voice tech startup and then ended up leading product at the voice tech startup, which was also a phenomenal experience. And through that, somewhere along the lines, I reconnected with Henrik, who is one of the founding partners at Play Ventures. I'd known him socially before. We reconnected. Him and Hari, who's the other founding partner, were starting up the fund. We started talking and they were looking for an analyst to join. So, I figured, hey, will I learn something? Yes. And so I said, okay, like the worst thing that can happen is I don't enjoy VC. I'll quit, I'll leave, but I'll learn something new. And so I jumped in with 2 feet. That was before we closed the first fund that we had, which was 40 million. And that was 7 years ago. So I think all things considered, it's going pretty well. And I think I found, I that's why I say I lucked into VC. It was not planned. I was very lucky also to have met, Henrik and Hari, and they were starting a fund. So everything came together very serendipitously.
For sure. I wonder, so maybe we could start with the fund itself. So obviously Play Ventures stands for, play. So you guys invest in a lot of gaming companies.
Yes.
So in my research, there are like a couple ones that really like it seems like they're like really popping out. So
Yeah.
one of them, I think like maybe we could start with the fund itself. So the fund was in
Sure.
2018, it was like a $30 million fund. And then in 2021, it was like 135 million. And then in
Mhm.
2024, it was like 142 million. So the fund is like growing bigger and bigger. So why don't we talk about like, since you were like the first employee joining the fund as an employee, now you're a GP. So like, can we talk about like, how has the fund been growing so big? And then what were some key lessons that you guys learned to grow the fund itself? Since I feel like raising the fund is a full-time job, basically. Uh, so I'm sure like you probably participate somewhat within the,
Yeah.
system. So why don't we start with like, what is a fund investing in? Obviously, you guys invest in gaming across the globe. How is that mandate kind of working out? And then maybe we could talk about the fund growth as well.
Yeah, sure. So Fund One was 40 million. It was closed. I remember it was December 2018, so essentially 2019. And it was, I guess we would call it a micro fund. I think it's a great, I think smaller fund sizes, especially for first time managers, are great
Oh,
fund
by
size
the
to
way,
go
I feel
with.
like 40 million is not microfund anymore. And there's a lot more
Yeah. I
microfund.
mean, like in the context of like now you have funds that are like early stage and 300 and 500 million. 40 seems
Yeah,
like
of
really
course.
small, but
Yeah.
40 was a good size to start with. I think 30 to 50 is like a great size to start with.
Mhm.
And that's just VC math, it's easier to return and all of that. And so, we've been working really hard with Fund One, and I think we're very proud that we've been able to return capital to our LPs as well, and we've returned about 1.5x of the fund. And so with the second fund, we raised it, I think 2020, 2021, right, was when it closed. And it was a very different market. You had a lot of funds growing bigger. capital. I think this was it's still ZERP. I think it's still ZERP. I think it was after that it kind of became a non-ZERP era anymore. But yeah, I think it made sense for us because even with the 40 million fund, when we had companies that reached kind of Series A, Series B stages, it's hard for a fund that size to continue to double down and do your pro rata into those new rounds. And so we felt like, we would do better with a larger fund, and it made more sense. After the first fund, actually, we raised another fund called the Opportunity Fund, which was 60 million. And the whole idea of the Opportunity Fund was to double down onto those fund one bets that we just weren't able to do because our fund size was only 40 million. So we figured we wouldn't do that again. Let's just raise a larger fund, 135 million. Still relatively, I think, modest in the grand scheme of things. It's still around 100 million range, and so when it was time to raise Fund 3, it was a frank conversation, I think, between the partners. Do we raise a bigger fund? Do we want to? It's going to be harder to return. Like, does that make sense for us? Does that kind of impact our ability to kind of give those kind of returns that we want to give to our LPs? And I think, the math is there. It's hard to argue with the math. After a certain fund size, it is harder to return 5x and 7x and all of that. So, we felt like, let's not do AUM creep, because that's not what, we operate by. We're very always focused about DPI and how we can return capital to our LPs. And so we figured, let's keep it the same size. And so, 135, 142, small increase of about 7 million. But, at the end of the day, it's still pretty much the same. There has been some things that have changed with, each fund. I think we've always had a history of working and investing in gaming specifically. So, what you think of when you could think of gaming. So game studios, game creators, game publishers, but also kind of gaming adjacent technology. Could be things in advertising, or it could be things like generative AI art pipeline. So those are things that we've always invested in. And with the third flagship fund, we've kind of expanded a little bit, the definition of what play and gaming really is. And ultimately, we think it's, interactive engagement, right? It's the operating system for that. And so we started to also expand into what we call playable apps, which is where it's the intersection of gaming and consumer, applying all the good things that we think free-to-play gaming has kind of, I guess, learned and perfected since the early 2000s, from user acquisition to, how do you design engaging and first-time user experience, core loops, how do you keep people coming back? How do you keep giving them a sense of progression? How do you design an economy to monetize them when, the game is free in the first place to play, and you later on monetize them through in-app purchases? So these are all things that, that again has been perfected and refined through 20 years of free-to-play. And there's an art to making games, but it's also incredibly scientific and metrics driven. And I think sometimes people who maybe look at gaming from the outside don't realize just how data driven it is, and how applicable some of these skill sets and these lessons can be into different spaces in the consumer verticals.
Wait, can we talk about the metrics? Because I think you guys, one of your portfolio is called Alter. It is a AI avatar app that kind of like got bought by Google for over
Yeah.
100 million. So why don't we talk about, like, since, like, I feel like for the AI avatar kind of app, there's, like, hundreds of apps that are in the same category. How do you guys kind of spot it, like that one app that could have huge growth? And how do they monetize to actually be worth like 100 million, right? So how do we think about like the metrics in general for gaming companies?
Yeah, I mean, I think Alter was a slightly different investment. It was all AI avatar technology company. So
Mhm,
it was founded by these two incredible founders, Robin and John, and they had kind of created the underlying AI avatar tech to work. So you could have something that's totally responsive. You could use your phone at that time, or your webcam and just have an avatar representation that was really artistic, responsive, and had all the physicality and everything. So it was more of a B2B play rather than a typical gaming, let's say, studio play. And that kind of follows more of I think a B2B SaaS kind of business model assessment. But if you're talking about, let's say, gaming apps or consumer apps, right? Some of the key metrics that are important, I guess, at the early stages is typically your retention metrics. So in gaming, we probably look at like day 1, day 3, day 7. There are benchmarks there of the kind of metrics that you need to be able to hit, because what you probably see over day 30, day 60 is a deterioration, right, in retention. So most of your users will not probably retain, right? You'd be doing really good to have like day 30, let's say 10 to 20%. That's pretty good. Or I would say pretty average in a sense. But that gives you a decent baseline of users that will continue to stay, play, and monetize. Depending on the genres that you build in gaming, the day 1 retention, day 30 retention benchmarks vary. But in China, for example, you probably have games that are retaining at day 1 60%, which is really, really high. And then in casual genres in the West, like a day 1 really good retention will be like 45%, or higher. So we're looking for that at the earliest stages. Oftentimes, though, honestly, because we invest at pre-seed and seed stages, there are no metrics. There's vision, there's maybe an MVP, there's founding team, there's a core team, but there aren't even any metrics. So it's a very different kind of, I guess, case-by-case basis in terms of how we evaluate. But I guess a lot of it goes back to the team. I think play, one of the feedback that I hear about play from founders is like, you guys really dig a lot into the product. And we do that even when it's the earliest stages. Not to say that we think that, hey, if this is the roadmap that you tell me and the hypothesis, it better be the case. And like, we'll be super mad if it doesn't happen this way. But it's more like, we want to know how you think about building product. We want to know are you looking at the competition? What are you seeing? What's the best practice? We want to understand what assumptions you're making. And we want to understand how you're going to test those assumptions as you build product. Because most likely the first product or the first iteration of the product doesn't work. That's the 90% of the case. So, it's kind of more like figuring out how they think and what makes them tick, and getting a sense of kind of the expertise and the knowledge that they've built in the particular space that they're looking to play in.
Totally. Why don't we start with, I think, like, we had a few gaming VCs on the show previously, partners from like Bitcraft now at like Lightspeed, or like Galaxy Interactive. I think like people were talking about the gaming studio a little bit too. So like, why don't we talk about like the gaming studio, the gaming publisher? Like, how does a gaming ecosystem kind of work typically, and what kind of games are out there? So, for example, I know that you invest in an app called Arya, so which is very interesting. It's like a holistic sexual wellness app. So like, and then there is, other apps like I feel like there's like like a lot of different, from like the emoji app to, the banking app. So, or like Bible chat. So there's like so many different apps out there that are like gaming focused. Why don't we talk about like the business model behind gaming? And then we could talk about like, since you mentioned like the consumer side of things, there are different benchmarks. It's like harder to track than the SaaS, but there's metrics that you could track, especially in the very early stage. I guess, how do you think about these metrics when there was like just two guy in a garage vibe things?
Yeah, I mean, I guess to answer that last question, how do we think about things when there's no metrics? It's the team, it's the opportunity. I think when we think about gaming, there's a lot of parts of gaming. There's different platforms, right? You've got mobile, which is typically monetizing through a free to play model. So that's where they look at in-app purchases and IP and monetization. You have PC consoles, which typically like you have AAA kind of titles, which are like your, Hollywood blockbuster kind of gaming equivalent. You have AA titles, and the development cycles for a PC console game versus a mobile game is typically quite different, right? So like a mobile game that you could ship maybe in like, depends on how you scope it, but could be 6 to 10 months, right? Like GTA's been, for example, I don't know if you played GTA or it's Grand Theft Auto. That's a game that's 15, I think 10 or 15 years in development. I can't remember, but it can, that's a AAA title that can take many years. It's a fantastic IP and franchise. So the length of development, the resources that you need to develop a game, it's very different. And how you monetize the games are different as well. I think there's been a little bit more, in-game monetization that happens, microtransactions that happens in PC and console now. Before it was probably like a premium title. You go out, you pay $50 for this title, and that was that, right, for a premium title. These days you might buy that, but then there's also kind of a live service component to it. There's GTA Online, which basically, kind of operates as a live service even after people have played through that first box set, right? So I guess the business models are different. There's a lot of tech that goes into supporting the gaming ecosystem, whether you're looking at engines, that's Unity or Unreal. There's a lot of stuff around the user acquisition piece as well, particularly on mobile. So, people, some of the most sophisticated user acquisition practitioners and stacks I've seen are in mobile free to play. They're kind of super scientific about using metrics, tracking ROAS, return on ad spend, tracking curves on that, and optimizing their campaigns to be super cost efficient, because it is a very competitive space. So, I think that's the rough three buckets that I would say.
For sure. I wonder, so since you mentioned about like user acquisition, there's like free to play, and then there is like cost efficiency slash like I guess like unit economics. Maybe
Yeah.
we could use any of your companies that as an example, from like how you meet the company to how do you kind of like diligence them to eventually like decided to like putting in money to the company.
Yeah, I think the good deals come from all sorts of paths. I think the number one probably quality deal source is always
Mhm.
founder referrals. And we think that's a great testament as well to kind of how we work with our portfolio companies. So yeah, the best ones we get are referrals from like other founders.
Mhm.
And I don't remember specifically now which ones were referrals.
Mhm.
Um, I can't remember now specific ones, but it'll come to me. But yeah, those are normally a great source of it. Some of the others just come through kind of network. For example, Henrik and Hari, the founding partners, they've been in gaming for 2 decades each. So, normally if there's a gaming deal coming somewhere in Europe or Israel or somewhere else, or even Istanbul now, like,
Mhm.
we do get a lot of pings on, hey, you should look at these teams. And sometimes they come from ecosystem partners that we've worked with for years, right? So I think it comes from a very varied source, but always kind of, I guess, qualified warm leads are always super helpful. Some of the other ones could just be cold outreach. So and sometimes more, I guess, hypothesis driven in that sense. So, for example, I was really interested in how I think gaming and some of the stuff that we know there about gaming could be used in new spaces. And I was really interested, particularly in, religion. I was raised Catholic, and so I started thinking about, hey, like what are some places where that could be really interesting, and religion obviously came to mind. Like Christianity is 2,000 years old. It's super sticky if you think about it as a cohorted over thousands of years. There's a lot of foundational practices that are very social there, that lends itself well to gaming as well. gaming builds on a lot of social practices, cooperative play or competitive play, or group quests and clans and things like that. So I thought there were like a lot of pillars there that was pretty interesting. And you obviously have a huge population of Christians across the globe. It's 2 billion, and I think growing in very many markets. And so started kind of researching like what options are out there, and saw Bible chat at the time. It was just starting to take off in downloads, and just reached out cold and just wouldn't take no for an answer was basically the
Mhm.
operation. And yeah, had a chat with Lorenzo and the team, and just knew from the get-go that that was something super super special. They were very early in their journey. Downloads was just starting to take off. We were super aligned with them on kind of their vision of what they wanted to build, and how they wanted to take some, I guess, design techniques and systems into building what they saw as their future vision for Bible chat.
Mhm.
So, like, yeah, I think the good deals can come from a whole bunch of different ecosystems and anywhere. And so I'm really glad that as a fund we invest globally as well, and we're not just like looking at a particular market.
Yeah, for sure. I wonder, so like I actually, so when I was associate somewhere, I look at the religious app as well. So there was like I think
High five.
pray.com was one, and then there was like yeah, it was like pray.com, and then there was like a bunch of like different,
Pray.com, yeah.
yeah, so like a lot of like different I guess like Bible study app or like Bible app. So I wonder, thinking about these different apps, so they have like different nowadays, like I think a lot of these apps are like promoting on TikTok, or like,
Yeah.
and all that kind of stuff. So I wonder, how do you analyze these kind of similar-ish companies? So, but for this company, seems like you saw it and then you saw like a huge growth and then you reach out to the company itself. But I'm sure there's like a lot of competitors that are doing similar-ish things. How do you kind of differentiate them in general?
Yeah, so I think when I started digging into the space, I looked at pray.com. I looked at, I think Halo is another one that's
Yeah,
doing
yeah,
really
yeah.
well,
Mhm,
Glorify and all of that. And I think again, we're looking at it from the lens of like, how can this be interactive?
mhm,
How can this be engaging? How can we bring social into it in the same way that you would see in a mobile gaming experience, for example?
mhm,
And I think Halo, Glorify, Critical, they're all great products and they serve a need. But I think what was different for us from the get go was kind of for Bible chat scalability. They leverage AI to power a lot of things. It's interactive. Even if it was rudimentary at the start, you could chat with the Bible, you could ask it questions, and I asked it a lot of questions. Um, and when we also kind of talked to the founders about their vision for the product and what they wanted to build, it was clear to us it wasn't in the same vein of what Halo was trying to do, or what Pray.com was trying to do. They really wanted to bring in a lot of those like social interactions right into it. And they wanted to bring in kind of like live operations, which is a practice in gaming. How do you turn a product like a game into a live service, right?
mhm,
And it comprises a lot of things, a lot of, you do events, you do different system designs and things like that. And so those were things that I think we were very aligned with them, and we saw it as like, okay, this is a way that as a gaming fund, we know we can help you, we can value add, and we're really glad that you're aligned with our vision of how we want to,
mhm,
we would like to see things.
mhm,
When we think about building or going into these spaces that are a little bit different from what a typical mobile free to play game is game studio is going to be like, we don't just think like, I'm going to start investing in every random consumer vertical, because
mhm,
we're looking at it like from a lens of how do we as a fund value add and help and contribute, and where do we have like an unfair advantage. And I think that is one area. I think if you're looking to, I don't know, build a direct to consumer
mhm,
brand, or there's probably other VCs that are probably have an unfair advantage in that area. I think this is the area that we feel like we can contribute in a very positive way, and we're not trying to shove it down everyone's throat that like you have to, like, I don't know, gamify everything. Like, not everything in the world needs to be gamified.
mhm.
So but some things I think could benefit from it, and I think that's what we saw in Bible chat as well.
I wonder, so, like, I guess, like, how do you acquire these, like, the data room from them, like, holistically? I guess, like, in general, I feel like when I was, like,
Mm.
working as associate somewhere, I feel like one of the hardest thing is, like, to ask data from the founders. A lot of the founders may not, like, provide everything, or like they have some concerns about, basically signing, like, so I mean in Asia, I feel like
Yeah.
signing NDA is kind of the vibe. But back in so
Yeah.
I feel like there was a lot of like data that you need to acquire from the founder, and then they may not share the data that are like, the most accurate. Maybe there's like some prediction and stuff. How do you kind of like take account of these like data that's maybe like imperfect? By the way, I want to say hi to Tracy. Tracy was saying hi to us. But anyway, sorry.
Hi,
Yeah.
Tracy. Yeah, so look, I think plays early stage. So we typically invest pre-seed, seed, series A.
Mhm,
Realistically, at pre-seed, there is nothing.
mhm,
There is very rarely anything. Some of these companies are like, yeah, actually, we just left our jobs like a month ago, and like we're
mhm,
thinking of starting up a new company. So, oh, have you incorporated? No. All right,
mhm,
let's talk about it. So there is no data, but
mhm,
you're looking at kind of their pitch deck at best, right?
mhm,
And working through with them how you're thinking about these things. How would you hypothetically, for example, know if your product launch in 6 months is going well, or if we need to kill the game and kind of go back to square one. So there is no data at that point. Sometimes at the C stage you do have some data.
mhm,
Again, these are very early stage companies,
mhm,
so the odds are that they don't really have maybe the most organized data room,
mhm,
or it will not be complete. And so as somebody kind of doing due diligence or digging into it, we ask for very specific metrics. We will ask for information. It's honestly going back and forth. So somebody might send me kind of like, okay, hey, here's my cohorted retention for the game so far or the app so far, and we'll dig into it. And like, I think we just have a benefit of being able to benchmark and figure out if somebody's kind of over optimistically reporting retention. There's many different shades of retention metrics. There's like your end day retention, which is basically bounder. There's unbounded retention, which sometimes founders like to use because it looks nicer. It's just more forgiving. Depending on the type of product that you're trying to build and the product maturity, that can be appropriate or inappropriate to you. So if you're trying to build a game that is a daily habit, like you want to use, the strictest definition of retention.
mhm,
If your intention is to build a product that initially or right now people come back to on a weekly basis or a monthly basis, like, you'd adjust it, but you're kind of also assessing founders based on like, hey, are you picking the right thing to measure your product by? Because if you're not, that is also a little bit concerning, because you're in the driver's seat. We don't want to be armchair product leads and armchair founders. It's not what we want to do. So like, I think there's no one way to get data out of founders. I've never really experienced it where, well, most of the time, I think founders understand that, if they want to get funding and, it's a conversation, they do need to open up the
mhm,
data room. They do need to share some stuff. I know there is always anxiety around it. So we try to be really respectful about, building that trust and rapport and
mhm,
everything. And, we're not sharing people's information and data all over the place.
mhm,
But we don't sign NDAs. It doesn't matter if you're coming to us from Asia or not. We just don't sign
mhm,
NDAs. It doesn't make sense. But yeah, I think generally, if you are able to build a good rapport with founders and they feel like you're on the same page with them and you're keeping up with them and you get what they're trying to do, like, I think they're generally pretty happy to share information. And sometimes, we give them feedback about, hey, this is looking a little, this is looking great. This is looking a little bit weaker. Maybe it's not something you want to tackle right now. Eventually, you might want to look at that, put it on your roadmap, put a pin on it, or hey, these are the benchmarks that we're seeing. So, we try to also be helpful with our feedback.
mhm. For sure. I wonder, how do you think about portfolio construction as like you guys invest in globally? So I feel like the valuation in different location can vary as
Yeah.
like hugely. So and then how do you think about like from the currency perspective, so obviously there's a USD, there's like other, different currencies. How do you do
Yeah.
the math in your head to like make sure that like, you have a well-balanced portfolio that's kind of will return the fund? So like I guess like
Yeah.
yeah.
Yeah, look, I think generally we look, the fund is denominated in USD, right? There are some, I would say, FX, I guess instability that comes depending on what currency. But generally, like if you're investing in Europe, it's the euro, it's pretty stable,
Mhm,
and elsewhere as well. And you can always determine what denomination you want to invest in. I think the biggest difference with different ecosystems is probably on two things: valuation arbitrage, and
mhm,
then two is just the burn difference, right? So the valuations in North America, yes, are always going to be higher. They've typically been historically much higher than in Europe or in Asia for sure. Um, but then you also have different pockets of ecosystems that get more competitive sometimes, and so they used to be more perhaps valuation favorable to found
mhm,
to investors, and they get more and more heated up. So an example would be like Turkey. Right? If I look at Istanbul, I don't know, like 10 years ago versus Istanbul today, the valuations are different.
mhm,
And if you look at the other point is kind of on burn rates, US company salaries, the burn is higher typically than Europe, Istanbul, some other
mhm,
places. But that also is always in flux. So again, to use the Istanbul example, salaries in the past perhaps were
mhm,
comparably more, I guess, cheaper perhaps than
mhm,
US salaries, but the gap has narrowed as it's
mhm,
become again more of a startup capital, and
mhm,
you get bigger competition for talent.
mhm,
By the way, most people there want to be paid in USD anyway, so it's actually a advantage for startups who are paying their talents in USD, just because that's a more stable currency. So yeah, I think there are differences. I think that has led to perhaps for some founders and for some VCs, I think adjusted their geo, I guess, construction and balance a little bit. For us, 30 to 40% of our portfolio has been in Europe, 20% has been North America, and then kind of the rest of the world. I think that's still a good general balance, in the sense that we've not been heavy on perhaps North American deals. So in terms of, valuation, inflation, and salaries and stuff like that, burn rates being higher, we've not really had to necessarily adjust that down. Like we are, I think, able to say, hey, I'm not sure this team and this opportunity that they're going after makes sense to necessarily, is this the best team in the US pursuing it in the world? Maybe not. And in that case, then we probably go with somebody else who's just as good or better and has a better shot of building a big company, because gaming is global.
mhm,
Um, but yeah, I think if it's a great team and it's the best team that we've seen in the US, that's not also going to necessarily stop us. As long as we can make the valuation and entry point work for us from a fund economics point of view. And can we see us getting that 100x return? Or
mhm,
sometimes overinflated valuation prices and entry points can make it harder. So even if somebody gets like a 10 billion exit, it still doesn't return your fund because
mhm.
your entry point was just much higher than what you need to get that fund returning multiple.
Speaking of the valuation, so like is do you guys have like a valuation target that like everybody have to be in a certain range, or um is it like just play by play?
Nice pun. No, I don't think there's a valuation target. I think
Mhm,
we look at it from more of, I think, of an ownership point of view, and and our check sizes and where we can see the exits at.
mhm,
So I think we kind of map it out from that point of view. Our check size, it's a $142 million fund. So,
mhm,
like our check sizes commiserate with that kind of fund size. And we target kind of ownership as well, because realistically that's what's probably going to move the needle over time as we get diluted. as startups raise growth and later stage funding. It's also because the way we work with our portfolio companies, we really work really closely with them. I know every fund says that.
Mhm.
But, we don't just wait till like the board meetings to kind of catch up with them. We do like monthly calls with them. We're in Slack channels with each and every one of them. I'm on WhatsApp with my portfolio companies. I'll hop on calls with them at all hours of the night. So, like there is a lot of support that goes into the founders that we work with. Whether it's who can I connect you with. We did a workshop recently on in-app currencies and how a founder can approach introducing that into his product, and kind of a 1 hour workshop on that. We'll do another one another time. We've done workshops on Gen AI. Like, so we put in a lot of resources to support our portfolio companies, and so I think that target ownership is also there to kind of make sure that we're invested and aligned with them.
I wonder what is the percentage of the company that you guys invested in are in these like different regions? So like do you separate them into Europe, America, like Asia, or like how do you kind of like
Like,
spread
do we have
the
quotas?
yeah,
Like,
do
do
you
we
have
have a
quotas?
target?
And then do you guys have like
Yeah.
a certain like for example, for like 142 million fund, do you save for reserves? Let's say half for reserve and then half for like I don't know, like just like the first track. And then for the first track, do you guys have like, oh, we have to invest in like 75 companies in this batch, or like do you guys do like a spray and pray, or like do you guys do like very concentrated?
We're very much not spray and pray. So, the Fund 3 portfolio will be about like, let's say maybe 26 companies is what
Oh
we've
wow.
modeled it on. So
Wow, that's
it's
big bets.
yeah. So I mean, but we do kind of allocate between initial checks and follow on, and we want to double down on the winners. In VC, there's often this, I guess, and in I think everybody behaves like it's human psychology, like it's on cost, like I've already put in so much, so I'm going to double down. And it sucks because you build up a personal relationship with founders, and obviously you want them to succeed, but then also you've got to put your like DPI hat on and be like, okay, allocation wise, we probably can't really make this happen.
Mhm.
So yeah, we do allocate, I would say half and half, maybe for initial checks and follow-on checks. It is a smaller portfolio that we don't want to have a big portfolio of companies with very little skin in the game in each of them. We want to make sure that we have enough ownership, especially when we have the winners and folks that we see can be breaking through. So yeah, I think that's just generally how we look at it. In terms of geo, we don't we don't have hard targets. I know some teams, some VC funds have like, they'll have like a dedicated person to look at Asia and a dedicated person to look at the US and dedicated person covers Europe. And that's not us. We're a team of like 15 in total and 6 or 7 on the investment team. And we cover globally. So I have, portfolio companies in Romania, and I have portfolio
Mhm.
companies in the US building Arias, couple intimacy, very different from Bible Chat. And portfolio companies building games in Berlin. So, we're kind of distributed all over, and we don't divvy it up in that way. I think there are ecosystems that we look at and we're like, okay, this is a rising ecosystem. This is interesting to us as a market. We want to keep an eye on it, but we don't set like hard targets of like 10% has to be here, because ultimately that doesn't matter at the end, because what we want to make sure is that we're betting on the right founders and teams and companies in that market. If I bet in a market, but it's the wrong team, then probably that's not that's not such a good
Mhm.
use of the investment check.
For sure. I wonder, so is there any particular thesis that you're following? Since like I feel like, we just talked about the differences between these like different portfolio companies. So for the I guess like the for the couple intimacy wellness company, like
Mm-hmm.
how do you guys think about it from the thesis perspective and like from the
Right.
Bible chat? So like do you guys have like, oh, like we invest in people's hobbies, and then we invest in like these like different sectors. So like how do you think about them as like investment thesis? Or do you guys approach it as like, more of like the bottoms up, like, okay, we'll see whatever is happening in the society right now and then pick the best out we could
Yeah.
find?
It's a mix. It's a mix, honestly. Sometimes it's bottoms up thesis driven, and we go and look and see if there's opportunities there and if it makes sense. And sometimes, honestly, we go down that rabbit hole and then we realize,
Mhm,
like, we learn things about that sector and we're like, okay, maybe not, and that
mhm,
doesn't go anywhere. And it's great when it does go somewhere,
mhm,
like with Aria, that focuses on couple intimacy. The starting point for Aria was me looking at dating apps, really.
mhm,
I was super interested in it. Obviously we have like Tinder, we have,
mhm,
sorry, Bumble and all of that. And I was trying to figure out if there was a play there where, we can do kind of that, again, free to play gaming, understanding engagement and
mhm,
keep people in the loop because, people
mhm,
kind of burn out, right? They turn out
mhm,
or they get ghosted. It's a bad experience, and then they stop
mhm.
using the apps. And
Oh,
I was like,
oh,
okay, could
oh, I have a dating app that I'll share with you later, sorry.
great,
Go ahead.
great, great. So, and then I was kind of looking at that space, not really finding anything, and also having some concerns over kind of like customer acquisition costs and competitiveness in that particular space. I think in dating, particularly, there is a early exit pressure. Like if you think about Match Group, sweeps up and buys everything that has traction, which is
Mhm,
great, but maybe not so good for the VC fund who invests.
mhm,
And so I started thinking about like, well, actually, like what happens after you date? Like
mhm,
people get together and then you're in a relationship. I've been in a relationship with my partner for like 12 years now. And
mhm,
so I'm like, yeah, what happens after dating? Like there's so many, couples in relationships or marriages, and that needs work too, and that needs fun, and that
mhm.
needs, engagement. And it gets hard as you go
Engagement.
on in a relationship, right? It does. Like, I mean, and so I started looking into that space about what it was and ended up getting connected. I think this was actually a founder referral to
Mhm,
Ofer and Tomer at Aria. And they came through one of our other founders in the portfolio. Yes, now I remember. Shout out to, I think, Mar from Incremental who introduced us to them.
mhm, mhm,
And we started talking, and I really liked their approach. I had looked at other players in that space, and it was very kind of like, hey, um, let's gamify the digital communication between partners. So like I'll send you a text and like it's a little game interaction on your phone. And that's cute, and that can get you installs and initial engagement. But I think what we see is like that's very difficult to do long-term retention on because it feels like it's cute, it's a gimmick, and then what, right? And then you get bored of it, and then you're like, stop sending me these stupid games. I'm trying to have a conversation with you about like,
mhm,
getting some stuff done around the house,
mhm,
probably. So we found that kind of tricky from a long-term retention outlook perspective. And I really liked Aria's vision of it, which was really kind of looking at it more holistically.
mhm,
You're not trying to gamify the digital interaction. What you're trying to do is address couple intimacy, and that happens online, but that also happens offline. You need to facilitate people, actually interacting with each other in that partnership, and then they go on. So it's like kind of a holistic, gamified or not gamified, but I guess holistic engagement kind of experience throughout your relationship that can happen for months and months and years.
mhm,
And when we started talking to them, it was such a rough MVP, honestly. It was so rough. But I was just so floored because, we were talking through it and they're like, yeah. And people are, we launched this because we just wanted to get feedback. We wanted to see if people would use it and what they thought. And, then we thought, oh, well, maybe we'll see if some people want to pay. We turned on payments. We never thought anybody would pay, but then they did. And then, that's like a huge indicator that you've got something that people want.
mhm,
And I looked around the space and there was just like no competitors. There was nothing like it. And so I gotta say it was an interesting investment committee meeting going there and being like, guys, I got something for you. Hear me out. I want to invest in a couple intimacy platform.
mhm,
But that was a deal that we did, and they've just been continuing to grow and grow and grow since we've invested. And I think that's a function of them really understanding the consumers and really finding product market fit with a need that nobody else is playing and meeting. So
For sure.
um, yeah, that was for Aria. I guess yeah, I think in general when we look at these consumer verticals, we always look for particular elements and foundations as to whether
Mhm.
free to play gaming, know-how, user acquisition, right down to engagement design can be incorporated, whether there's a good foundation there. And we always look at whether effort can result in a controllable outcome.
Mhm.
So like, Duolingo is a great example, right? If you put in the effort, you can expand your vocabulary. A counter example to that is like fertility. I probably would never try to do that because that's completely not controllable by user effort. And so that's one pillar that I look at. I look at whether there's complementary motivations to that consumer vertical space besides entertainment. So, is it learning? Is it
Mhm.
building a closer relationship with your partner? Is it your spiritual wellness? Is it improving your financial wellness?
Mhm.
Are there inherently social practices? So obviously, interacting and playing with your partner is inherently social. A lot of Christian practices are social. You go to Bible study, you go to church, you do all these things, prayer groups. There's a lot of social interaction within there already that you're building on. You're not trying to shoehorn it into something that doesn't fit. And then kind of, I guess the biggest indication is like, are people willing to pay for this service in some level? So
Mhm.
these are kind of like, I guess, broad categories of things that I use as like
Mhm.
kind of a check mark to see, is this something that is a play consumer investment?
Mm, for sure. I wonder, in since like you live in Singapore, so I wonder, I
Mhm.
feel like the LP community in Singapore is extra strong these days. How do you guys think about like kind of building the relationship with the LPs since a lot of the funds, since I guess like the founders have a lot of experience in the gaming space and then you yourself
Mhm.
is coming from like operator background. So I'm sure you guys have encountered a lot of different investors from like individual level or like high net worth individual. But how do you think about like approaching to do like a I guess like institutional gaming fund as like when it comes to
Yeah.
fundraising? I feel like in
Yeah.
the Web3 era, it was a lot easier to raise the gaming fund. Yeah, it was
It was
just
a lot easier to fundraise, period, I think.
yeah, exactly. So, but nowadays, I feel like it's a lot harder, in the past, like, I guess, 2 years. So, how do you guys think about, like, fundraising perspective and then building relationship with the LP community in Singapore? Is there, like, a particular, like, area that where Singapore LP just live? Like, kind of like well, in the Bay Area, like, obviously, the investors are on, like, Sand Hill Road or, like, there's, like, a particular co-working space that, like, every
Oh.
emerging manager like stays in like how do you guys think about like the deal thing? So is there like particular place that like Singapore LP just all show up together?
No, actually, I don't think there's a particular. I mean, Singapore is a very tiny city, or an island, city state.
Mhm,
You can travel from end to end within like an hour and a
mhm,
half or hour drive.
mhm,
So it's really not that big as a city. And so I don't think there's a particular Sand Hill Road kind of area
mhm,
where all the VCs are concentrated there.
mhm,
So yeah, also like you're just an hour drive away at maximum. So
mhm,
it's not that big of a deal. Um, I think we've our LP base is pretty diverse and
mhm,
distributed as well. So we have LPs in Asia, we have LPs in Europe, we have LPs in North America as well. It's pretty global.
mhm,
We have also a mix of LPs with our first fund. Like it was primarily, I think, gaming strategic family offices, especially those who came from gaming and understood the industry that we were investing into, and high net worth individuals.
mhm,
And we've been, I think, I don't want to say lucky, but I guess lucky and fortunate as well that like
mhm,
a lot of the LPs, I think number one, first of all, we've returned fund plus extra, right? Right. We've
mhm,
returned 1.5x on fund one. And so they've continued with us into every vehicle and they've continued to place their faith and their checks with us. And so that retention of the LP base has been really, really something that we don't take for granted at all. And we've also since then, as the fund has matured, we went from 40 to 135 that has also allowed us to bring in more institutional LPs, endowments, and things like that. And so the LP base has changed and evolved and diversified as we move from fund to fund. And again, from fund two to fund three, we've had a lot of the same LPs continue with us. So we've been very lucky in that regard. But I think the realization is probably like every LP background is a little bit different, and so what an institutional is looking for is going to be different. What a family office is looking for is sometimes different, and not all family offices are built the same. Some are really into for example, co-investment opportunities, right? Some people, a potential LP that I met just earlier this week, yesterday, I think, told me like he doesn't care about co-investment opportunities. It's like, that's your job. And his approach is more of like a fund allocator. So every family office is also different. And I think it's about, kind of understanding what each major LP is looking for and what they're interested in and what moves the needle for them. And, is it just a pure financial investment? Are they kind of more of the allocator from that point of view? Are they looking at it from strategic insights, deal flow for themselves at later stages, so on and so forth? So every LP is very different. And, all the partners take a role in kind of, owning a relationship and making sure that we continue to have that dialogue always with our LPs. And sometimes it's sometimes it's just hopping on calls with them to discuss something that they might want to understand because they're seeing it in the market. And yeah, we found that that's a great way to just keep the relationship going.
For sure. I wonder, so since like we're about to be at the end of the conversation, we still
Sure.
didn't talk about AI. So maybe we can talk about like, what's your thought on like, how is AI impacting the gaming space? And then what are some like investing trends in AI that you're excited about?
Yeah, I mean, we've done a few of AI investments. I think I put them in a few buckets. Kind of more consumer AI plays enabled by AI. Bible Chat is one of them. Aria is one of them. All of them, or Faraset, which is another company that we invested in, is consumer AI studio, making consumer AI apps. So, AI is at the heart of them. I know some people have different opinions about consumer AI as a wrapper or whatever not. But, I'm of the opinion that ultimately when you look at users, people want convenience. Like, could you go and, I don't know, vibe code like your own photo editing app? Yes, you could probably do it. But I think people overestimate how much of the population wants to do that. And even if you are technical and you have time, maybe that's not, you're not going to want to vibe code everything. And if you have a good alternative out there, I think there is still great opportunities for the right consumer AI apps. I think the other bucket that we've invested into are companies that offer, or I guess have AI at their core, and they're kind of more B2B gaming adjacent tech businesses. So companies like Scenario that does generative art AI, working with game studios, so your 2D and now 3D art pipeline, you can really use AI to scale that so much faster. You can build a character concept so much faster. You can also get an art asset from that to production ready, like, and an artist could do that in a fraction of the time and a fraction of the work needed. To something like Medica, which does offer optimization and LTV optimization using AI. So there's those things. I still think there's probably more opportunities in that front, but I think the line that somebody told me, I think sums it up really well. I'm going to steal it, which is, I think the era of artisanal software development is over. I think that's pretty clear for developers, and I'm really excited. I think that's going to present a lot more opportunities. You're going to have a lot more teams just working so much more efficiently and shipping faster, and I think there's a lot more to dig into that space.
For sure. I want to wrap with a quick 1 minute fire round for you.
Yeah.
What's your favorite book?
Okay, like if it's fiction, or maybe it's not fiction. I think it's fiction. I really like Shantaram. which is about this Australian bank robber who escapes prison and goes on a crazy adventure in India. I read it when I was in junior college, and it's always just stuck with me. It's just hugely fun and immersive and unbelievable, and takes you away.
Mhm.
I also really like Principles by Ray Dalio. I think that's a great book to read if to think about like, hey, what are your principles in life and in work and stuff like that. So yeah, I think those are two of some of my favorite books.
Who would you invite to your dinner party?
Because I'm from Singapore, but also not because I'm from Singapore, I'm gonna actually say Lee Kuan Yew, just because
Mhm.
I have a huge interest in geopolitics. I think that impacting so much of the world that we live in, and so much of the world that we will live in the future. And I think he's always been, somebody who's really kind of had a razor sharp analysis of the world and very prescient. And so if I could, I would love to pick his brain about like, oh my God, where do we go from here as a society?
Mhm. Who made the biggest impact in your career?
Um, I mm, I'd probably say uh the founding partners at Play. I mean, they gave they started fun and then decided to give me a shot, even though I had no PC experience at all. So yeah, that's obviously been a huge change in what I've been doing, and it's been incredibly fun. So
Mhm. Where can we find you outside of work?
um I'm a homebody, so you can probably find me at home playing GTA over the weekend or Baldur's Gate or something like that, and just reading and like just decompressing.
Love that. Well, Phylicia, thank you so much for coming on to the show today. It was such a fun conversation.
Thank you, Grace, and happy 4th of July to everybody in the US. Yes.
Thank you. Let me quickly
All
end.
right.